In the fourth quarter of 2024, General Motors lost $3 billion. Well, actually, it wasn't quite that. It was 2.96 billion US dollars. Here's the reason why. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Great to have you with us. I want to say a big thank you to everyone who has joined the channel and become a member. Still working on my health video. That'll be up very, very soon on the channel. And so will my supplements video as well. And by the way, if I burp, I apologize. I have just taken, there we go, 25 different vitamins and supplements that I take on a regular basis daily. General Motors lost 2.96 billion US dollars in the fourth quarter after a $4 billion charge for restructuring its struggling business in China. But it did log a record full-year adjusted profit globally and in North America. However, that's probably going to change, I would say, this year. Now, record profits could be a thing of the past for General Motors. In fact, that's very, very likely. The net loss in the quarter ended December 31, compared with net income of 2.1 billion a year earlier. So General Motors went from making 2.1 billion in the fourth quarter of 2024 to losing 2.96 billion the following year. Fourth quarter adjusted earnings before interest and taxes surged 43% to 2.5 billion on cost savings and higher volumes as revenue rose 11% to 47.7 billion. But that does sound good, yeah? If you're a General Motors investor, which by the way, Warren Buffett is not anymore, Berkshire Hathaway dumped their shares of General Motors, all of them. They just got rid of them very quickly. I think for a key reason why, and I'll explain why I think that was. Anyhow, for all of 2024, GM's net income fell 41% to $6 billion and adjusted pre-tax earnings rose 21% to an all-time high of 14.9 billion. Revenue increased 9.1% to 187 billion. Guys, a lot of the media will talk about revenue this, revenue that. It doesn't mean anything. Revenue means jack all. You could have a $10 trillion in revenue, but if you lost 20 billion, then you lost 20 billion. I mean, I don't really know why we focus so much on revenue, but I get it. I mean, if you're a beginning company, you're a new company and you're building for the future and you've got massive growth prospects, it's all right. It's all right to lose money. That's fair enough. But if you're General Motors and you've been around for 100 years, well, different story. A year ago, I said that we were optimistic about 2024. Given the choice, we would offer our customers, including industry-leading full-size pickups, new and redesigned SUVs, and an expanding portfolio of EVs, CEO Mary Barra said in a Jan 28 letter to shareholders. I also said that we would focus on execution and profitability, and our performance has been consistently strong. Now, before I go on, I want to point out that this year will be difficult for General Motors for a few reasons, but one of them will be Trump's tariffs on Mexican and Canadian-made cars. General Motors does have factories in both countries. Those tariffs will be 25%, meaning those vehicles will no longer be competitive. If General Motors continues to sell those vehicles in the United States, it won't make a profit. I mean, margins in the industry are pretty tight. There's no way they can make a profit on vehicles if they're paying a 25% tariff. It's just not possible. So this will be a challenging year for General Motors if Trump's tariffs come into play. But there's also some looming challenges outside of Trump's tariffs. North American pre-tax profit, though, increased 13% to 2.3 billion in the fourth quarter and 18% to a record 14.5 billion for the full year. UAW represented hourly employees will get profit-sharing checks of up to $14,500, the highest General Motors has ever paid and the equivalent of more than 2 months extra wages, said Mary Barra. GM shares, though, were down more than 9% in morning trading. So in response to this news, people didn't say, oh, well, record profits. They actually looked at it and said, okay, stock down 9%. We're not confident. Special items totaling 5.2 billion turns General Motors' fourth quarter adjusted profit into a net loss. The biggest was a roughly $4 billion charge to restructure and write down equity in its 50-50 joint venture with China's SAIC Motor Corporation. That's a government-owned car conglomerate in China. General Motors warned of this charge in December. General Motors also took charges in the quarter of $643 million US dollars for 2023 buyouts of Buick dealers and $520 million to end funding for its Cruise robotaxi operations. The charges dragged GM's full-year earnings well below its earlier guidance of $10.4 billion to $11.1 billion. Adjusted pre-tax earnings for 2024, however, finished at the top end of GM's range of $14 billion to $15 billion. For 2025, General Motors projected net income of $11.2 billion to $12.5 billion and adjusted earnings before interest and taxes of $13.7 billion to $15.7 billion. That outlook assumes that North American policy will be stable compared with 2024. So that outlook doesn't take into account Trump's tariffs on factories in Mexico and factories in Canada. And the cars that General Motors makes the most money on are the cars made in Mexico. It's much cheaper for GM to build cars in Mexico. So those profits, those numbers will be different if Trump's tariffs go ahead. CFO Paul Jacobson told reporters that the company does not yet have certainty about the potential tariffs on North American trading partners or other federal policy changes under President Donald Trump. In other words, they're hoping Donald Trump doesn't go through with it. GM has tried to expedite deliveries to the US of some inventory in Mexico and Canada to get ahead of any tariffs, he says. How trade, tax, and environmental policy will change under the Trump administration, it's uncertain. We don't know for sure. To be honest, Mary Barra is saying she doesn't know either. GM has a very broad and deep portfolio of both internal combustion and electric vehicles, and it can react with agility and efficiency. Now, GM, I should point out, it makes some good electric cars. It does. They're not world-beating, but they're pretty good. But there is one problem. If General Motors does sell more electric cars in the United States, which is obviously by far their biggest market now, it's not going to make a lot of money. Its profits will go down. GM has never ever said that it actually profits making on the sales of electric cars, because it doesn't. Not yet anyway. It might in a few years' time, but that's not going to happen in 2025. But General Motors might say, some of them we do a profit on, but it won't disclose which ones they are. That might be the $100,000 electric pickup trucks, luxury ones, maybe the enormous Hummer EV, but there's no way in hell they're profiting off the Chevy Blazer or the Chevy Equinox, which are really the volume sellers for the company. Mary said this, and I want to know what you guys think. We believe the president wants to use policy and regulations in ways that will strengthen, not harm, domestic manufacturers like GM. We look forward to continuing to work with the president and his team as they consider how to strike the right balance on these important issues, said Barra. Now, I should mention that I don't think Donald Trump gives two shits about Mary Barra's feelings. General Motors really are UAW, right? They're in with the UAW. The UAW was really in with who? The Democrats, right? I'm not criticizing them. I'm not making a judgment call on this. It's simply a fact. General Motors and Ford weren't on the side of really on Donald Trump. So I don't think he's going to say, oh, my good friend Mary. Yeah, Mary, what do you want us to do? Okay, we'll do that for you. There's really no incentive for Trump to care about Mary Barra's feelings or anything that she wants to happen. And keep in mind, Donald Trump can't get reelected again. So he doesn't have to play the right cards to try and get reelected. He can do whatever the hell he wants. And I don't see him appeasing General Motors or Ford. There's just no real reason to do that. With respect, she said, to possible tariffs, we are working across our supply chain, logistics network, and assembly plants so that we're prepared to mitigate near-term impacts. Many of these actions are no cost or low cost. What we want to do is spend a large amount of capital without clarity. What we won't do is spend a large amount of capital without clarity, she said. Guys, here's the other problem for General Motors that I think General Motors is not mentioning to investors, and they probably should. If you look at the top 10 most American-made cars in America, they're all Teslas. There's one Ford, and there's a few Hondas. None of them are General Motors vehicles. None. None of the top 10 most American-made cars in America are actually General Motors cars. None of them. No GMCs. No, there's no GM brands in there. There's no Cadillacs in there. So what does that mean? A huge amount of the parts going into GM's vehicles come from China, come from Mexico, come from places, South Korea. So tariffs definitely could hit them. Absolutely they could hit them. And keep in mind, if Elon Musk has some sway over Trump, which I believe he does, Musk will be saying, hey, you know what? Put tariffs on all those parts coming from other countries, because most of Tesla's parts in the United States are coming from where, right? All of Tesla's batteries now in the United States come from where? They come from America, right? Most of the parts in Tesla's cars are coming from the United States manufacturers. So if Trump was to put tariffs on parts being made outside the United States, that wouldn't really hurt Tesla very much, but it would hurt General Motors. And to be honest, let's think about this. Does Elon Musk want to hurt his rivals? I reckon he probably does. GM struck a confident tone, Bernstein analyst wrote in a research note, but they added, in our view, the guidance for 2025 leaves no room for errors and does not include impact from regulatory changes in the United States, especially on tariffs and EV support. Yeah, it's going to be a difficult year. The other reason it's going to be a difficult year is because GM sales in China continue to fall. Every year they have fallen for the last 4 straight years, and there is no way that will change in 2025. If anything, it's going to get worse. GM's factories are inefficient to the max. They are running at below 50% capacity in China. General Motors, it's been reported from different Chinese sources, will have no choice but to shut down some of its factories in China. It will have to write off billions more in losses in China this year. You need to take that into consideration if you're looking, if General Motors are going to report our profits this year are going to be blah, 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 blah. They know that is going to be an inevitability in China, and that will hurt their bottom line as well. GM said it increased electric vehicle sales and market share in 2024 and has several new models going on sale this year. The automaker said it achieved a key profitability metric in the fourth quarter, positive variable profit. What is that? Positive variable profit, which excludes fixed costs. What a wacky term. Positive variable profit, which excludes fixed costs. Okay, that's some interesting reporting. They said in part because of increased production and lower battery cell costs. So what I'm taking from that is, I don't know. I'll just say lower batteries. Batteries are costing less. I think that's great news. I think we all knew batteries were cheaper for pretty much every company in 2024. General Motors built and wholesaled 189,000 EVs in 2024, below its 200,000 goal, but it was close. That's only 11,000 off their goal, which is pretty good. The company expects to wholesale 300,000 EVs in 2025, a level that he said would reduce losses by at least $2 billion. Now, what that means is because General Motors are making more EVs, they'll lose less on every EV they sell in 2025. That's the good news, right? But as you can see, they're admitting they're still losing money on the EVs they do sell. The volume trajectory and the growth, and therefore the realization of the scale benefits, is coming in a little bit slower, Jacobson told analysts. We think we can deliver the lower end of that $2 to $4 billion of savings improvement, even though it's on lower volume than where we thought we would be more than a year ago, and certainly throughout last year. Here's the thing though, GM should probably make a statement, probably apologize for misleading investors. Mary Barra went on talk shows, on Oprah, on CNBC, on CNN, all these different shows, promising General Motors would beat Tesla in electric car sales in 2025. They promised, and there's some pretty funny videos out there where the interviewer would say to Mary, are you sure, Mary? Mary, I just want to ask you again, Mary, are you 100% sure? Mary's, yes, absolutely. Now, if this were a fair situation, investors would get some sort of potential, something out of this. Like the SEC would say, Mary, you said this comment, and you're not going to do this. Clearly, you're going to be a mile away from this ever happening, or at least in 2025. Anyway, you can't promise this and know really that it was never going to happen. Anyway, Jacobson said that General Motors has multiple playbooks to be able to respond to any policy changes from the new administration, such as imposing tariffs or cutting EV tax credits. But General Motors didn't say what these playbooks are or what they're going to do, how they're going to pivot. EV inventory shrank to a 70-day supply from 100 days at the end of the third quarter, he said. That's good news. Because GM's selling more EVs, inventory levels were lower. GM ended 2024 with a 53-day supply of gasoline vehicle inventory, in line with its target of 50 to 60 days. The company said fourth quarter incentives as a proportion of the average transaction price finished 3 percentage points lower than the industry average. GM's guidance for 2025 assumes sales of more than 16 million vehicles in the United States, improving financial results in China and reduced spending on Cruise, Jacobson said. So GM is saying they're going to have improved financial results in China in 2025. I don't think investors believe that's true. That could be one of the reasons why investors are like, we call bullshit, because you're not going to improve your financial results in China in 2025. How are you going to do that? Honestly, if you're one of the analysts on the call with Mary as part of their fourth quarter results, they should have said to Mary, you're saying you're going to improve results in China. How exactly are you going to do that? Because I'd be curious to know what her response would be to that. I'd be curious to know how General Motors think they're going to save the company in China. I don't think anyone believes that's going to happen. The automaker, though, is also budgeting for some volume and mix headwinds and a slight drop in terms of pricing in North America. But it remains to be seen how that will affect them. The company's performance last year will result in strong performance bonuses for salaried employees, in addition to the $640 million US in UAW profit sharing. China. GM reported an equity loss of $4.06 billion in China in the fourth quarter, compared with income of $93 million a year earlier, though Barra said the numbers were in black before the restructuring cost, but I don't believe that's true. Because General Motors had made a loss in China the previous two quarters, Q2 and Q3 of 2024, General Motors made a loss. And they're saying, oh, well, if we didn't have to write off all this stuff in China, we would have actually profited in Q4. That's pretty unlikely. Inventory for the SAIC GM joint venture is 60% lower than at the end of 2023, Jacobs has said. And GM is finalizing restructuring actions with SAIC GM. They're expected to reduce production capacity. In other words, they will shut factories. And General Motors will have to write off those factories. So these write-offs will continue. They won't stop now. Executives said they do not expect GM will need to contribute any additional capital as part of the restructuring, and that General Motors is aiming to return to profitability in China this year. GM also said it expects $1 billion in annual savings from exiting Cruise's robotaxi business. It anticipates saving about $500 million this year. Is that a good thing, though? Is it a good thing that General Motors killed their robotaxi business? I don't think it is. I understand why General Motors did it. Bad PR. The vehicles were having to be driven by remote operators sometimes. But I think General Motors should have stuck with it. I think they should have found a way, because the future of the automotive industry is autonomy. In 15 years' time from now, most people will be driving without touching the steering wheel. And if General Motors cars can't do that, then that is a very big problem.